You're listening to the Wise Women Invest podcast, a division of Noise Media Network, hosted by Audrey Bell Kearney. Wise Women Invest is on a mission to help 1 million women learn how to make smart money moves by becoming savvy investors in real estate, the stock market, cryptocurrency, and early-stage businesses. Now your host, chief noisemaker, and wise woman herself, Audrey Bell Kearney.
Good afternoon, and welcome to another episode of Wise Women Invest. I'm your host, Audrey Bell Kearney, along with my co-host, Carolyn Shoemate. Good afternoon, Carolyn.
Good afternoon. How are you today?
Ooh, listen, I've been up talking since 8 o'clock this morning. I'm fine. How about yourself?
You're good. I've been up talking since 9. So we've both been talking a bit this morning. So
Yes.
I'm doing great. Love talking about finances and helping people put their financial house in order. So it's a great time to be doing that.
It is. But you know, Carolyn, it's a little scary for some people because right now the markets are so volatile and people are a little bit afraid, like what's going on? Am I going to lose all my money? And so that's why today I wanted to talk about stock splits because, you know, last week Amazon stock split and people were talking about it. But I think that a lot of people still don't understand exactly what that means. So I know that, you know, you are our in-house financial advisor, especially when it comes to stocks. And so I want to talk about what does that mean when a stock splits. So I'm going to pull up Amazon, just a picture of what their stocks are looking like right now. So just give me 1 second as I make that happen. Okay, I thought I was gonna make it happen. What did I do with it?
While you're making that happen, let me just say for our listeners that the market is doing a lot of things right now. If you're already investing, you want to stay there. Just keep investing, keep doing what you're doing because the market, it has just shown in all the histories of the market, there are times when it's up and there are times when it's down. You want to be a systematic, continually investing and allow your money, give your money time to work for you because everything that's happening, just think about a real simple example like gas. Gas goes up and then it goes back down. Okay, so that's life. That's the world we live in. The market is going to go up and it's going to go down. So you're not putting all of the money that you have in the market anyway. So we want to make sure that you're diversified, but don't grow weary. Don't be scared. Just continue to invest on a regular basis. And so now, see, you have that up, Audrey. That's great.
I do. So, you know, Amazon stock split. And I think a lot of people, especially people who don't really understand what that means. I have a friend, she has a huge portfolio, right, that she doesn't know anything about. And so she calls me, she asks me questions on like, okay, you need to do this, check this, do this, check that. But people have money that they have sitting in brokerage accounts and they just let it sit there and they don't know what's happening from 1 minute to the next. I wanted to talk about Amazon because I have Amazon stock. I'm sure you probably have Amazon. Listen, I need Amazon stock as much money as I spend at Amazon. So I have Amazon stock and so do you probably. Can you explain to people what does it mean when a stock splits?
I sure will. And let me just do this too, Audrey. I love to tell stories and to help people really understand something. So remember last week, we talked about it a little bit when we talked about how during the pandemic, a lot of people were sitting at home ordering stuff from Amazon, right? And so Amazon continued to grow. And Amazon's share price before the split was $2,447. So if you wanted to buy a share of Amazon, you needed at least $2,000 to buy one share. Well, you need $2,400 to buy one share. Now, just thinking from a regular person, let's say a person who has no idea the market or anything, and they say, I want to buy some stock. The average Joe, what do you think he's going to say if he looks and sees that Amazon stock is $2,447 a share? What do you think?
I don't have $2,400 to put in those stocks. That's exactly what they're going to say.
That's what they're going to say, especially when they figure out that it's only going to give them one share. That's one share. So what happens in a stock split is the board of directors. Let me do this before I talk about that. Let me ask you this question. Well, let me say this. In a stock split, the board of directors decide that they're going to do the stock split, that they're going to give, and that's for the, it's really for the current shareholders, but there's a benefit for people who are not as well. So here's a really quick, easy example for you to understand what a stock split is. Audrey, let's say I told you that I have, you tell me you have $100 bill, and I tell you that I have two $50 bills. And I say, Audrey, let me trade my two $50 for your $100 bill. Did you still get the same money?
The same exact amount.
The same exact amount. So when a stock split is when the board of directors of the company decide that there's going to be they're going to increase the number of shares that are outstanding. So anyone who had one share of Amazon, that split is called a 20-for-1.
Mm-hmm.
So now when you see the share price for Amazon at 122, before the 122, it was 2,400. So everybody who owned a share of Amazon now got 20 shares for that one share.
Okay.
Does that make sense to you?
Really?
Yeah, they now own.
So that's the 20-for-1. So, oh no, I didn't know that. I thought when it split down the middle. Like if I had one share, now I got two $50 shares.
No, it's because their share price was so high. If you owned one share of Amazon, you now own 20 shares. And the value doesn't change. You follow? So nothing has happened to the value of Amazon. Nothing has happened to the value of your stock. You just have more stock for the money that you have, the money that you spent. Make sense? And
Okay.
one of the reasons they do the stock split is to, one, they want to make it more attractive to people who may want to buy shares, because you just said earlier, at $2,400 per share, a lot of regular people can't afford to buy one share of Amazon. If they spent $100, it's a small little smidgen, because you can buy a fraction of a share. You can buy a piece of it, but you can't own a full piece if you're not going to take $2,400 and put it in there. You follow? And so when they allow the share price to go up so high, then companies make that decision to let the stock split. And it does not change the capitalization or the value of the company. It does not change the value of your portfolio. The split does not do anything except give you more shares.
Okay, so what's the benefit of having more shares? Because if I'm thinking so, because I could get people who don't understand it could get excited. I had one share, I went to 20 shares, and the share price is 2,400. So in my mind, I'm thinking, well, if I have 20 shares, that's 2,400 times 20. So I'm at a whole nother mindset, but that's not how that works.
No.
Okay.
It takes the number, it takes the total amount of shares that you own and just splits it. You know, if it was 2-for-1, it would be half. But this particular split, because Amazon stock was so high, it was 20-for-1. In order for them to get down to $122, which makes it more attractive for almost anyone who wants to now own Amazon stock. It's very attractive at $122 a share. It was not as attractive for the average investor at $2,400 per share.
Oh, I get it. So look, guys, I'm learning too. Like I'm not a stock person like that, but I am learning. So it was $2,400 a share. When they split a 20-to-1, now it's $122.44 a share, and that was at 11:06. So just know it fluctuates. So it's 11:39 right now. So 11:06, it was 122 per share. So if the price goes back up to $2,000 a share, everybody with that 20 shares, now that price becomes 20 times 2,000.
That is correct. That is correct. That is
nice.
Correct. That share price goes as that share, and even as it goes up. You know, if you pay $122.44 for it, let's say it goes up to $500 a share next, you've made money.
Yes.
But the difference is you now own 20 shares instead of one share. So the value is going to go up per share than it was when you actually had it. So the stock split itself, just understand there's no reason to panic. You haven't lost any money. All they did was take the number of shares that you own and they split it and said we're going to give you this number of shares for that same amount of money. That's all that is. And it's done really to make companies more attractive, to make it so, because Amazon was at a point where there were not a lot of new shareholders. You know,
Mm-hmm.
most of the people who own Amazon stock were people who bought it years ago, or the very wealthy who could afford to pay $2,000, $2,400 per share. So they did not have a lot of new shareholders. And every public traded company wants to have a lot of shareholders. You follow? Because that increases their money and increases the value of the company as it goes up, but they want more. And so it wasn't as attractive because it was so expensive for the average Joe.
Wow. So listen, I don't know if you just learned something, but I just learned something because I've heard stock splits before. I even worked in a company at one point where I handled portfolios for people when they were trying to sell their stock. So, but I've never heard it explained that way before. So thank you for doing that. Now, how often do companies do stock splits? Do they do them often, or just when they're trying to make sure they bring in new, make it attractive for new investors?
It depends. I don't know, and I don't know how many times Amazon has had a stock split. I don't think it's been that often because that it has just climbed. They left it decline for such a long period of time, but they usually do it when they want to make the company more attractive, to make the shares more
Affordable.
and affordable. The only company that I can think of, and mainly because of the fact that I was really paying attention to them, but Apple has had about, I think, five stock splits since I've owned shares of that company. They've had about five. Their most recent one was during the pandemic. They
Really?
Yeah, Apple had a stock split in August of 2020. In
Wow.
August 2020, they had a stock split. Their their um their price was around $600 a share at the time, and it went from 600 a share to $92.
How the heck did I miss that one?
And so I don't know, but now that we're doing these, we'll stay on top of this so that our customers, our listeners, can hear about this. But companies decide to do it on. I don't think it's very routine because it doesn't happen often. And when it does happen, everybody's buzzing about it because it's not an everyday thing. You know, for Amazon to do this, or for many companies to do. But I do know Apple, since around 19, well, since the beginning, they've done about five, and it's not every year. You know, it's every couple of years. But some companies do it more than once.
So for the people who they have Amazon stock, but they have fractional shares in a mutual fund. How does the split work when it comes to a mutual fund? Is because that's not a share. So how does that
Same
work?
difference, same difference. They get their fraction gets added on as well. So anyone who owned any part of Amazon stock, whichever way you had it, whether you had half shares or full shares or one share or two shares, whatever number of shares you owned, the number of shares increased. The amount of money did not, but the number of shares. And I just want to make that very clear that it didn't. Your portfolio did not increase in value, monetarily. You simply have greater number of shares of Amazon stock. And if Amazon continues to go as it's going, and people are still have boxes coming to their house every day, and they're continuing to grow and grow and grow, though that share price is going to go up. I see from what Audrey posted on the screen here that it's down this morning by 0.56. But that's the stock market. It goes down a little bit and then it goes back up. But all indication is that it's going to climb back up again. And kudos to all of our listeners who already have Amazon stock. And if you don't have it, it's a great time. It's a great time to get a mutual fund that has Amazon stock in it, or if you have the money, buy it directly. But I always recommend that people do. If you're schemish about the market and don't really understand, a mutual fund is a great way to go because Amazon would be one of the stocks inside the mutual fund. And then of course, as those stocks go up, then your portfolio would increase in value. As Amazon stock goes up, your portfolio will increase in value.
So what she's saying is get something. Get something because Amazon is gonna go back up because I'm probably gonna buy something by the end of the week. So I had a book came yesterday, and I'm one of those type of people who still love books, right? So I honestly just still I got so many books that I have not read that I just like I need to get that book. So and now I'm not the only one. Like I look at my Amazon account and I give my daughter access to that account, and she spent way more than me. She have like so I have to clear my cart every time I go to buy a book because she has a bunch of stuff in my cart. So I have to clear the cart, put it safe for later for her. So Amazon is gonna go back up. So make sure you guys have some shares in your portfolio. Um, when it comes to building a portfolio, I heard somebody say last night while I was looking at a stock night before last, I was looking at a stock show. They was like, make sure you own Apple, make sure you own Amazon. I think it was Microsoft and something else. They named like five big ones, right? Make sure you own those. And so um if you had to give advice on which stock people should definitely have in their portfolio, what would they be? Because not everybody like Apple. You know, they don't.
Exactly. I Let me first say that I'm a big component of people investing in mutual funds where you have over a hundred companies that you're investing in, and there's so much diversification because you have companies from every single area of your life. There's grocery stores in there, there's clothing stores in there, there's auto companies in there, there's drug companies in there, there's gas companies in there, there's Apple in there, there's Amazon. So I'm a big proponent of folks investing in mutual funds and having that as a part of your portfolio because you've got a lot of different companies that you're investing in at the same time. And you don't necessarily have to have that money where you have to go buy, you allocate money to go buy a certain number of shares of stock and just own that. So let me say that first, that I strongly believe in mutual funds. Number two, there's an acronym that I think I shared with this a couple of weeks ago, and it's called FAME. Facebook, Apple, Amazon, Netflix, Google. Now, Netflix, Google, Apple, those are all kind of like computerish, industry type
Technology.
companies. Yeah, tech companies. And then there's of course Amazon, which is consumer goods. You want to look at Warren Buffett, who you guys know is one of the wealthiest men in the world, next to Elon Musk. But Warren Buffett always said that when you're building your portfolio, you should build it from companies that have been around for years. They have a track record, but not just a track record, but they're companies that you personally go to and spend your money. Companies like, and when you think about these companies, and they're also companies that are on everybody's tongue, that everybody's using. Um, Amazon is one of them. The whole world is using Amazon, the whole world. Apple revolutionized the technology world with their phones and their iPads and their MacBooks and all of that. The whole world went from a computer world to a device and to Apple, and so they revolutionized and changed the technology industry. So that's the company that you want. Coca-Cola, many people don't even think about that anymore, but how many people to this very day when they order food, and I have a Coke with that, and I'll have a Coke, Coca-Cola, talks about in terms of consumer goods, Walmart, a company that's been around for years, that's going to continue. Walmart changed, and Walmart is changing its way as well because it realizes that during the pandemic, so many people didn't come to the store. And so they started doing more online. Oh wow, somebody just said Apple split again last week. So they're talking about more online um, servicing, online buying. So Walmart would be a company that you may go to all the time. So he talked about always making sure that you're investing in companies that you go and spend your money in. Think about your favorite restaurant, or think about a restaurant that has grown all over the nation, all overseas, and that's McDonald's. We don't think about that a lot, but McDonald's is a restaurant. No matter what, they started off with a burger, a fry, and a Coke. Okay, so and now they have all this other stuff that they've added to the menu, but they still have the basic. And it's a company that's been growing for years. Ever since Ray Kroc invented McDonald's, and so that's a company that is stable. There's McDonald's on every other corner. There's McDonald's and all overseas. It's amazing when you go to another country and you see a McDonald's. You follow? So that's a company that's growing international. So you're looking for companies that you personally spend your money at, companies that have some longevity, some track record that you've been to, companies that you see other people go to. Maybe you're not a Walmart person, but I guarantee you that you've passed by Walmart and looked and saw all those cars and went, well,
Absolutely.
why are all those people at Walmart? So I hope that answered your question, Audrey, that you really want to build it with companies with longevity, companies that you personally go spend your money at, companies that your friends go spend their money at, and also look for companies that pay dividends.
Yeah, that's a great answer, Carolyn, because I think a lot of times people don't know what to invest in, and for me, I know where I spend my money at, so I'm trying to invest in those companies. And I want to say something about Coke. Let me tell y'all something about Coke. Coke is not going anywhere. Coke, there are restaurants in Georgia. If you're in the state of Georgia, you can go to certain restaurants and you can only get Coke products. That is it. You can't have anything. You can't have a Pepsi. It's not gonna happen. And when I first realized that, I was like, why don't they sell Pepsi? Well, probably because Coke has a contract with them that you only sell our products exclusively. So they're not going anywhere. And that's one of those companies you can go anywhere around the world and see a Coke can. It's gonna look the same, it's gonna taste the same, and you're gonna recognize it because you know the brand. I saw a documentary about Africa, and one of the things they were doing, Carolyn, they were unloading trucks and trucks of Coke in Africa. It was crazy. So that's one of those stocks that you definitely want to have in your portfolio because they have been here a long time and they're not going anywhere. They're just not. People like Coke. Coke
They
changed the
do.
taste one time and they were pissed off, so they changed it back. So they're not going anywhere. So we're gonna wrap, but I want to say this real quick. So Carolyn and I are gonna be doing a 4-hour boot camp in August. If you want to dive deep into learning how to invest, like really learning the ins and outs, I got to tell y'all something. I got introduced to investing in 1997. I was working at Prudential Insurance Company, and they sent me away for Minority Weekend, a Minority Leadership Weekend. When I went away for that weekend, they taught me how to read the Wall Street Journal because I had no idea what a ticker was. I had no idea how to read it. And they taught me how to read the Wall Street Journal. And I have been hooked on this type of stuff since 1997. It's nothing like being in a room with people and learning how to make your money grow. It really isn't, right? And there's so many ways for you to do that. The stock market is one way. Being a business owner, can we never talk about that? But that is one of the best ways to grow your wealth. Being a business owner, one
Yeah,
of the
maybe
best.
we'll add that on when we do the workshop.
Yes, because you have to. I get it. You want to go to work. I can tell you right now, there are people right now sitting on the edge of their seats because they don't know if they're going to have a job. But here's the thing: if you had a business, you wouldn't have to worry about that. Now, I'm not going to front with y'all. I'm gonna keep it real. Doing what we do is not easy, but it's really gratifying.
Very
That's all I'm
true.
saying. It's really gratifying. So being an entrepreneur is not an easy thing to do because you have to give up a lot sometimes, and sometimes people don't want to give up anything. You got to give up their nail money, you got to give up your hair money, you got to give up your martinis on Friday night. Something you're gonna have to give up, right? But it just depends on how bad you want it. So we're going to be doing that workshop. I'm going to drop the link here. It's going to be a hybrid, so it's going to be part live stream and part in person. So we'll give you the locations, but it's going to be here in Georgia, and the live stream is going to be live stream probably on Zoom. So you'll be able to attend. We want you to come out and get this information and go back and share it with your family and friends. We can only reach so many people, right? It's 11 o'clock. A lot of people haven't even gone on lunch yet, so they're going to miss this broadcast. However, it is recorded, so you can go back and watch it later. But in the meantime, figure out how to, and we're going to talk about this, Carolyn, one day, starting investment clubs, because I think that's a really good thing to do. And so maybe after we do finish our boot camp in August, we'll do a segment on how to start a really good investment clubs and what that needs to look like. I think we might need to do that before, but we'll see. We'll see. So any last words before we say goodbye to next week?
No, only that it's a great time for you to start investing in yourself. You know, wise women and wise men invest in themselves. You have an opportunity to really change your life. And one of the ways you can invest in yourself is to tune in to these podcasts to where you can hear people sharing information that you need to keep for yourself.
All right. So listen, guys, that's all we got. We will be back next Wednesday with another great episode. We were going to talk about the personalities for investing, but I had to talk about the stock split because it just happened. And Missy Shirley, shout out to you. Thank you for dropping in on us and sharing the fact that Apple split again last week. And the price for Apple right now is $150.49. Now I'm gonna say this: I'm going to get me some shares. I don't have any Apple, and which makes no sense because I have an iPad and an iPhone. Apple is about to drop their 16 something. My daughter was telling me where you can erase the message if you send it to somebody.
Yes.
So that's going to go off the charts. And of course, people are going to run out of my Apple phones because one of the things I know for a fact, if you've ever sent a message that you did not mean to send and you wish you could go back and delete that message, you soon will be able to do that. And what does that mean for Apple? That means that everybody who can't delete that message on a Samsung is going to get them an Apple. So that price is going to go back up. So be sure to, follow Apple and see what they're doing. I'm not telling you to invest. I'm just saying follow. I'm going to get me some shots. So thanks, Missy, for sharing that. Listen, y'all stay safe out there. Carolyn, thank you again for co-hosting with me. I love it. I think we're doing a great thing here, sharing with people how they can make their money grow. And listen, this is only going to get better, y'all. This is only, I think, our fifth episode. It's going to get better because there's a lot we got to share with you guys. That link right there, go to that link right there and sign up for our workshop coming up in August. We're going to be live and in person talking about everything, investing, stock, mutual funds, gas, oil, gold, NFTs, crypto, all of it. You're going to get it all. Your head is going to explode. So sign up for it. All right. Thank you, Carolyn.
All right. Have a great day.
All right. Bye, everybody. We'll be back again next week. Until next time, make it a great day now. Stay safe out there.
You've been listening to the Wise Women Invest podcast. Tune in daily at 6 p.m. for a new investment tip to help you make smart money moves. To learn more about Wise Women Invest and to join our community and investment club, go to www.wisewomeninvest.club. To never miss an episode of the podcast, download the Wise Women Invest app from the App Store and be sure to share the show with another wise woman. Again, our website is www.wisewomeninvest.club.